Welcome to smartly.com. This is the update overview video for the jewelry shop. The update was to add financial statements, income statement, balance sheet, cash flow statement, as well as a cap table. The original base logic all still works. I'm going to go through each tab, explain the assumptions, and then you'll have an idea of what is going on here. So first tab, global control. This is where you define assumptions about timing, the name of the company, exit end month, and if you want to include terminal value or not, and the EBITDA multiple that's going to be based on. You've also got cash sources here where you can define any debt funding that will flow to the amortization schedule, which is the debt schedule tab. Note on the exit month, if you have chosen to include terminal value, this will automatically be paid back on that month. If not, it'll run like a regular schedule. We've also got tax rates here that will apply accordingly to, you'll see that on the income statement. And note that you can always zero these out if you don't want to show tax effects. The investor equity, owner equity is going to come from the cap table. And if you see over here, the cap table is going to pull from the model the minimum equity required for the whole project, startup costs, and any burn. Assign percentages to different share types if there are. And then you can define up to 20 outside investors or investor groups, what they commit and how much of each share type they get, as well as owners or insiders and their investment, if any, and the stock that they get. You've also got this internal rate of return and distributions for each individual, as well as an aggregate for each of these investor pools. Finally, we have a check summary here, and this will pull all the main checks from all the tabs to make sure everything is matching up, and these should always be zero. Revenue assumptions, so you can basically, it's a jewelry shop model with retail-based categories. You've got all these different categories and then subcategories. For each subcategory, you can determine the start month of that product line and average sale price of low, mid, and high products, as well as the percentage of each product that's sold and how and the count that flows into low, mid, and high. For example, if you were to put 100 here, then 40 products or 40 products a month would fall in the low, 50 would fall into mid, and 10 would fall into high. These are just arbitrary assumptions. You'll fill this out according to your own schedule and strategy, as well as pricing. You can turn categories on and off here, and that will flow to the all the way through to the model if you don't want a given item to appear. You've also got cost of goods sold, so this is where you're defining the margin, and this is based on the cost per unit on average for low, mid, and high items for each category and subcategory. These are the gross margins of each subcategory. Remember, you're only editing cells in light yellow with blue text. We've also got fixed expenses and other costs, so this would be general and administrative and selling costs, managers, rent, any legal fees, just general fixed expenses, and you can determine the start month of each item, as well as the monthly cost in year 1 through 5. We also have some variable costs here. If it's a franchise jewelry shop, you could potentially have franchise fees on your revenue. And then we have other fees as a catch-all as a percentage of revenue that's going to show on cost, and then sales tax if applicable. That schedule we went over. Terminal value. So, and this is not relevant for this model. This just shows the 3 main exit values. So you've got the EBITDA multiple valuation basis here. So that 17,326,000 is broken down between what's applied to extraordinary income versus what's applied to any fixed assets defined here in this percentage, and then the rest is any if there's a sale of the building. And you can determine any CapEx items that are going to be depreciable on the CapEx schedule, their useful life, and the month of expenditure. The top row is always for building. Cap table I went over. Startup costs, these are just any initial costs or reserve items that you need to account for before the business starts. Now we have income statement, monthly and annual. This is the monthly. We've got sales, cost of goods sold, operating costs, EBITDA, interest, depreciation, and then we've got taxable income, taxes, net income. Income statement annual does the same thing, but on an annual basis. See right here, and then here's a check to make sure they're the same. Balance sheet, we have a couple items here for current assets, cash and inventory, and that's going to drive off the inventory one schedule. And here you can define for how many months you purchase inventory in advance for. So every 2 months means you buy it here, and then it runs out 1, 2, you buy it again, runs out 1, 2, buy it again, and so on. You can define any variable here. You can put every 6 months. It'll just affect the cash flow and affect the inventory balances in the balance sheet. So you can see that is shown here. We've got non-current assets, which would be all the CapEx items, accumulated depreciation, total assets, liabilities is just the one debt amortization schedule, common stock or investor equity, retained earnings, and total owner's equity. Then you obviously assets always have to equal liability plus owner's equity, so we have that equation here, and making sure that that all checks out based on all the totals of each subtotal on the balance sheet. Balance sheet annual does the same thing but on an annual basis. And this is all connected to the assumptions. So as you change assumptions, all these numbers will change. Cash flow statement, just operating activities, investing activities, finance activities. We've got it all laid out here. We're actually showing when the payments for cost of goods sold happen. So this is where your cash gets reconciled. Cash flow annual, just the same thing, but on an annual basis. Executive summary is kind of like just you've got a little bit of a P&L here, and you've got all the other cash flow items, total here, cash flow post-tax, and then return multiples. We've got distributions, discounted cash flow analysis for that on a project level and for investors and owners in their own pools. Some checks done here to make sure the numbers are lined up logically, and then a visualization. We've also got an overview tab. So I kept this because it's got drivers for base, and so you can put in your base sales and pricing, and then you can adjust it here with one click and put, well, what if my sales are lower than base or higher, and what if my prices are lower or higher, and then you could define what percentage means low, what percentage means high, and that will adjust. So if I put like higher here, you can see the revenues go up because I'm selling more. Or if I sales were lower, you can see how they go down from base. So that's all dynamic. We have some more visuals here showing, cost summary by year per category, cash flow versus accumulated cash, sales count per item, or average sale amount per item, annual gross profit, EBITDA, and then gross profit and profit margins. We've got valuation. This is just a standalone. You could choose to use EBITDA or revenue multiple, discounted cash flow analysis, and then the multiple based on the method, and that will apply to these cash flows, expected cash flows of the business, and give you an enterprise discounted cash flow valuation. Note this is not a net present. We're not showing the net present value here, just the future value of cash flows, or the present value of future cash flows. Break even is just going to use those variable costs, and all the rest are fixed expenses to figure out what your break even revenue is. Monthly detail is going to have all the items for all the different subcategories for sales, as well as costs. And this is how we're deriving all of the data elsewhere. So this is the main source, and we've got final cash flow, other cash items, debt service here. The annual detail tab has the same thing as the monthly, but just annualized. And again, you can hide rows here if you only want to see high level categories, and then this gets a lot easier to digest. You see sales by category or revenue, total revenue, cost of goods sold by category, total cost of goods sold, gross profit, EBITDA, cash flow. So that's nice. And that's the conclusion of the overview. Link is in the description box below to purchase. I will also post this model on vendor tabs. It will be $125 one-time fee, or you can also buy this within an industry-specific financial model bundle at smarthelping.com. All right, I'll see you on the next one.